Hi, I'm Jordan Bradford with the Tranel Financial Group. Hope you're having a great day. I just wanted to give everyone a quick update on what's happening with the markets and the economy, and of course, the elephant in the room, which is the presidential election we have coming up here in just under 2 weeks now. So, a lot's going on right now. Wanted to give everyone that little bit of an update so you have a sense of where things are this year during a global pandemic. So I think one of the big things, and we've talked about this in many of our videos in the past here over the last few months, and I've talked about this to great lengths with clients as well, is that the market has really seen a good bounce back from our lows back in March. And it's been driven heavily by the big growth companies like, such as Amazon, Apple, Google, Microsoft. The big tech companies have really been the leaders in this recovery in the stock market. Now, there's still a lot of economic signs that are worrisome, right? Unemployment's still high. We have people leaving the workforce and staying out of the workforce. So that's certainly something that we need to be cognizant of, right? We're spending a lot of money in our country. So the deficit continues to pile up, and that presents some risks of inflation. So while we have historic low interest rates now, one of the main tools that the Federal Reserve has to combat inflation is raising interest rates, which is great for your savings account, but it's not so great if you own long-term bonds or if you're looking to buy a house or refinance. So my encouragement to many people during this time has been, take advantage of the fact that rates are low, but also be aware that rates may not stay this low for as long as we expect, or as long as we're thinking at this current time. If inflation does start to creep into our lives, it's one of the main tools that the Fed has to combat that. So just be on the lookout. That's a risk that's out there in the economy. But let me touch a little bit further on, the market and what's been happening. So as I said, it's been really driven by the large growth companies. But the S&P 500 through the end of last week was up about 9.4% for the year, which I think is pretty incredible given everything that's going on in the country. We've talked about the pandemic. We've talked about race relations here. We have a big election coming up. Many, many things have been weighing down our country and making it harder for the market to really continue to grow. 2019 was a great year, and we didn't really see a lot of these challenges come to the forefront. So it's certainly, in my book, a big win that the market is doing as well as it is actually doing this year. But to go one layer deeper, I want to talk about the type of companies that have really been driving the market, right? I mentioned those big 5 tech companies, but it doesn't just end there. It's mid-sized growth companies and small-sized growth companies as well that have really been pushing the market forward. In fact, if you looked at a grid of growth and value companies, and large versus mid versus small, what you'd find is the growth companies have done better at both the large cap, mid cap, and small cap levels, which is really just something pretty incredible. And I think it goes to show that a lot of the investing over the last few months has really been driven by hope and future optimism. Because the reality is we are still in a precarious situation with this pandemic. And I don't see that going away anytime really soon. So we're going to be having this discussion in the beginning of 2021 as well. And so I really think that, as we look at this, I think we're looking at the market and we're saying, these large growth companies are leading the way, but so are the mid-sized growth companies and the smaller growth companies too. And so I think there's opportunity with the other spectrum of the market, which is the value-sized company, or the value style companies, I should say. Especially large value companies that have been around for a long time, the staples of our economy. I think that they have performed more what I would call expected in this market. We're still down a little bit, but have recovered quite a bit from the losses back in March. So obviously, I think there's some opportunity there. I think there's also a great opportunity now if you have major concerns to be evaluating what you've got going on. Because, as Warren Buffett would always say, when you're going to buy, you should buy low, and when you're going to sell, you should sell high. So if you feel you're overweighted in some of the tech companies, you're overweighted in the stock market, now is a perfect opportunity for you to take a look at that. Contact a professional. If it's someone at our firm, we'd love to do that for you. If it's someone somewhere else, please reach out to them too, because now is such a great time for you to be evaluating what you're doing so that we can make good decisions going forward. And we don't want to be chasing the returns that we've seen earlier this year. Right? I mentioned how good those growth companies have been doing, but the reality is that we can't just expect that to continue in the same shape and form. So you have to be really looking at things in a different lens right now than I think we've had to in a long time. And of course, that brings us to the election, right? Which, like I said in the beginning of our video here, is the elephant in the room, right? That it's a very polarizing topic. And the reality is, no matter how the election results come out, there will be roughly half of our country who are disappointed in the results. And so what I'm encouraging you to do is just really understand that regardless of what you see in the news, right, things are going to be okay. Our country will do great no matter what happens. We will get through the next 4 years. We'll get through, we'll have so many things change in our country over time. So I want you to just kind of understand that, you may not get your candidate elected, and that's okay. And historically speaking, the market actually tends to perform about the same following elections, regardless of the outcome, which is pretty incredible. I didn't personally know that, right? But I did some research, and basically what I was able to find was that the market essentially operates as though there wasn't an election post-election. Now, leading up to the election, typically more volatility, which is what we're seeing right now. The month of September wasn't the best month of the market. In fact, it was the first down month since March. So the market had been doing really well, and then we saw a bit of a speed bump, which was September. And I anticipate that just between now and the election even, we're going to continue to see volatile days in the market. But I think post-election, you'll see the market settle down a little bit because it's one less thing of uncertainty that's hovering over the economy and hovering over our stock market. So I hope this was really valuable information to you. If you have questions, and if you're saying to yourself, I think my portfolio might be out of balance a little bit right now, or I might own too much of those aggressive companies, or maybe your big concern is interest rates, and you own a lot of bonds, and you're saying, how will this affect me going forward if inflation rises and the Fed has to combat that by raising rates? Please reach out to us. You can reach us at 847-680-9050. We are here to help, and we would love to give you some great guidance.